has been a very challenging year. It's a very different year than years before. The market is changing, but we all appreciate your continuous support and the business you have contributed to GMI. So thank you again.
Apa yang anda buat itu adalah 100% genuine dan tahniah kepada semua IB dan juga MIB GMI.
Welcome back to another week here with WPAT. Okay. Hey guys, thanks for sticking around. And it's another Thursday. It's an exciting Thursday. Actually, it's a Thursday where maybe if you were trading gold, it's super exciting for you because either you are stuck in a lot of trades or you made a ton of profits. Okay. All right. So, first thing first, guys, here at WPAT, the no BS trading, where we're actually focused on making sure we're not here to waste anybody's time and we're going to make trading super simple, okay? So simple that any strategy being shared can actually be utilized immediately. But remember one thing, okay? Forex trading is a high risk investment. It may not be suitable for everyone. And we are talking about Forex as the investment instrument, okay? Now, obviously, what we're doing here is purely for educational purposes and entertainment purposes only. In no way or any means we're providing any signals, okay? Anything that's new to you that you haven't tried, please make sure to utilize a demo account to test things out first before you guys actually dive head first into your real accounts, okay? All right, without further ado, let's actually dive in and quickly take a look. Last week, what did we talk about? We talked about what to do when you're stuck in trades, right? The things that you can actually do. So let me just quickly share this with you. One second. I'm trying to find I'm going to change this picture. One moment. Okay. So anyways, let's do a quick recap of what happened last week and why is this important for today, okay? It pays to have a very good structure of folders on your computer. Done. You guys see my picture? It's huge. Oh my gosh. One moment. Okay. Take a look. This is, I'm going to just put it right on the side. All right, guys. So this is last week's quick recap, okay? Last week we talked about if you're stuck in trades. I mean, if you have opened orders. Okay, whether be it is in positive or negative, doesn't matter. Fact is, you're in trades, okay? And when you are in trades, okay, what are some of the options that you can do? Three options. One is basically cut the loss, right? Take a hit, cut the loss, restart, get back to your strategy, and start reclaiming some of those wins again. Okay, if you've already missed out on the exit, right? The second option, you could hold the order. Now, how and why should you hold the order? Basically, you have to take a look at the large time frame, okay? If the large time frame is telling us that the direction of our trade is in the correct position, or the trend is directly related to my opened order right now, then we can hold on to the order. Granted that we do have enough margin, okay? And if needed, add a trade, okay? Add on to the trade. So then you can actually maximize on the trend itself, okay? Most of the times, the Forex market is more trendy, okay? Any form of um, consolidation, there's still a lot of people who are trying to push for the trend, okay? So most of the time, the Forex market is trendy. So it will always come back to its trend. All right, so holding on to the order, if the overall direction is correct, then add on to another order. Okay, and the last option is to hedge. Well, it's not the last, it's my third option, right? The third option is to hedge. Now, hedging, the whole point of hedging is actually to decrease the losses, okay? It's not to just lock in on your loss. Okay, some brokers, like we mentioned, they do charge 50% margin level, okay, for hedged orders. Some, they don't charge 50%, so it's a pure hedge. It's perfect, okay, but some brokers, they charge. All right, hedge still has its risks, okay? So what you're trying to do with hedge is to decrease your loss and decrease your exposure, meaning once you can get out of a hedge, or let's say I hedge the direction, start making some profits, I'll close my profitable order and cut my losses either to the equivalent amount, or I'll cut some lot sizes, so then I limit my exposure in the market, holding on to losses. Okay, I think I'm just making myself super complicated right now. So I'm gonna have this on the side later to continue showing you. All right, guys. So let's quickly take a look at what to do when you're stuck in orders, right? Okay, so let's take a look at the trades right now. In WPAT's educational program, okay, we have been teaching or sharing basically different strategies that you can apply immediately. I personally like the long-term trading directions, okay, just because it's safer for me, okay? All right, 1 second. 1 second. Sorry, I'm just making an adjustment. Before I move on. Okay, all right, so moving on. Let's actually continue our chat. So as I was talking about, basically what we have actually talked about is we have different strategies that we showcased. We have a long-term strategy, we have a short-term strategy, right? Trading on the lower time frames. Obviously, when we're trading on certain strategies, sometimes when we miss out the exits, or let's say the strategies did not respect its direction, then what do, right? We're stuck in a lot of trades. Okay, I'm sure once in a while when you're trading, you're going to be stuck in the exact same position as we are. Okay, so for example, right now you're looking at the balance of $4,954, right? Initially we had 5,000, right? So anyways, and then basically you're in a floating loss. Okay, so you're stuck in a lot of trades. So what to do, right? Basically, we have to come back to the super important thing, which is these three options. Either we cut our loss, hold on to an order, and add on to the order, okay? So then we increase our chances of profits, or we decrease our exposure by making hedges, right? These are our options, okay? So let's quickly give you an example about what we did. Example with cut loss, hold orders, and also hedge. All right. So what we did is we did all three options. Let's quickly take a look. See, these are the things we did, right? So gold was it was a major hit, right? We had 1, 2, 3. You see, these 3 orders, okay? You see, over at the comments, it says, oh, sorry, you guys can't see the comments because I'm blocking the picture. Done. You see the comments, it says to, and then from, and then to. Basically what this means is that we did partial closes, okay? So let's quickly go into clear chart and show you guys. Okay, over here, you see this red line where my mouse is moving along, okay? This is where we close our order. So initially we had a sell over here at the very bottom of 2082-ish, okay? We had a sell. We actually closed off the sell of a 0.05 lots. With our strategy, what was being set, we've always been doing it with 0.1 lots. Now this trade has been actually going on with our RSI and stochastics trading, okay? So basically, what we did is we cut our loss. We cut our loss because the market continued going up, right? You see? So let's see, drop it in here. It'll be easier for everyone to understand. Bear with me if you guys don't get it, but don't worry, sooner or later, this will be really important. Okay, see, this is where we did our sell. Let me give you this in yellow. We did our sell order here. Why? Why do we sell our order here? Okay, because back in the time, 1 second, there. Back in history, what we ended up doing was because we respected our entry, okay, our entry of what? Of our 4 hours, stochastics, and RSI, right? Remember, we always talked about using D1. D1 is always the best option, right? So you see D1, it happened as well. We entered a little early, but we're not entering in the wrong place, right? So basically, within our gold order, right at that specific price point, right? Okay, right at that specific price point is accurate. Okay, so we basically entered with our H4 strategy because our RSI and stochastics are overbought. So we did a sell, right? And obviously the market went higher. So then we had to cut our loss. So this is what we did, right? With cutting your loss. Okay, now when we cut our loss, what we ended up doing is then we actually take a look. Once we cut the loss, we enter into another sell position. Why? Because our RSI and stochastics on D1, okay, it is still on the overbought zones, so the chances of a potential reversal is highly possible. Okay, obviously, this whole week, gold has been rallying very bullish. Okay, a lot of it has to do with the potential news that is supposed to happen later on tonight and tomorrow, okay, where a lot of people are talking about a potential cut in interest rate. Okay, so you see, the economic data does affect the potential outcome of a price. Okay, so but with that being said, I don't want to make forex complicated. Okay, forex is very complex by itself, but if we don't even understand how trading technical analysis works, jumping into fundamentals, meaning the macroeconomics and stuff like that, is going to be super hard for you to get. So no BS trading. We're going to simplify everything. Okay, so by simplifying, we will sometimes miss out these fake outs, which obviously we were respecting our strategy and we were faked out because the market continued going up, right? Okay, so what do we do? I have to say, I think like today's class or webinar is probably the best one so far, because this is something that a lot of people will start facing and a lot of people don't talk about it. Okay, there's no teachers out there that teach this. All right, anyways, what we ended up doing, you see, is that we cut the loss, right? So then we took the hit at 0.05 lots, and then we entered with an order of 0.05. Obviously, this is a partial close as well. I'll explain that later. Okay, so our rule goal when we were doing this whole thing is that 0.1 lots is to do this RSI and stochastic strategy, so we understand which orders we entered, right? And then the 0.06 was the pivot point strategies that we entered, okay? All right, so then this is our second. Uh-oh, 1 second. Okay, second exit. All right. So these were ones, they were the same orders. Okay. We just basically closed off half lots when we increase our trades. So for example, you see, I closed half the lot size over here, and then we basically entered into a sell with 0.1 lots. Okay. So this basically respects our second option of hold the order, add an order. Okay, hold the order and add an order. Okay, which is option number 2. Okay, now you guys will say, this is so foolish, Raymond. You added an order, and guess what? You can tell that the market continued going up. Well, yes. Thank you for calling me a fool. Guess what? Possibly you would fall into the same trap as I did. But the good thing is, it is okay because we are sticking to our rule. Okay? We're sticking to the rule. Sticking to what rule? We're sticking to our trading rule, which is if stochastics and RSI are above their overbought zones, then basically the potential for reversal is high. So therefore we'll enter into a sell, right? That's basically what our rule is all about. Okay? So you see the market went higher, so therefore we cut our loss at the bottom and we entered by placing an extra trade on the same direction that we were aiming at, okay? Because of the rules. Great. And then now third order. Okay, third order you see is over here. Let me just move this all the way up. You see this golden line? The sell is at 0.05 lots. So you see that is basically initially a 0.1 lot trade. We basically closed it, okay, closed half of the lot size, and then we entered over here with a 0.1 lots, okay, which is still sticking onto the rule of what? Of our section, which is hold the order, add a trade, okay, add an order. Hold the order, add an order, okay, that's basically what we're sticking to. Now, what happened about hedging? Well, over here we did an example of hedge. Let me show you. Let me use 15 minutes just because it will be easier to see. Alrighty. This is where my golden line is, okay? This is where we entered into a buy. Now, you do see that there is a sell order of 0.1 lots, okay? Yes, it's a little bit of a profit, okay? Did we gain much? No, we haven't, okay? But the thing is, by hedging, we are able to possibly limit our exposure. Our exposure of what? Of our margin, okay? By limiting our exposure of the margin. So anyways, by placing the sell, okay, we hedged it, so then we use less margin to actually place our additional sell order on the top. All right, so then this basically gives the best perfect example of utilizing all three options, okay, on your account. Great. All we did is just to provide you examples of how it is working in the market, okay? Does not mean that you should do all three on your account. So I think we should now jump into the exciting stuff, which is what the heck? We're stuck in so much trades. You're in negatives of 1,900. You have 4,900. You're screwed, right? Okay, this is probably what we think. Yeah, there's a high chance we're screwed. Okay, but no, let's not be screwed. Let's actually try to recover and recuperate, right? We recoup the loss. All right. Overall, our accounts, yeah, lost $45, but it is what it is, right? The market lied to us. The market does not respect our technical analysis. Then so be it, right? It happens once in a while, okay? Analysis is not always 100% accurate to the point, okay? It can never be, and it will never be, okay? So please understand that. All right. Now, let's actually look into what is exactly holding for the market now, okay? So guys, if we're stuck in trades, we have to actually review everything that we have opened. So to easily take a look, we have to organize them via our names, okay? So when you have a lot of orders opened, okay, you have to organize it by the names. Now, why? Because then it's easier for you to take a look at how your exit plan is. All right, it's easier to organize. Okay, one more time, guys, what we're doing here is purely for educational purposes and entertainment purposes only. Okay, so um, let's have some fun. All right, AUD, JPY. We enter with 0.06 lots. Obviously, this is to respect the pivot point trading. Obviously, we didn't get to exit the trades properly. Okay, so let's quickly take a look. We did a buy. Why? Because the prices were above the pivot on our 15-minute chart before. Okay, so let's show you where is this potential entry point. Great. Okay, so basically our buy order was here, yeah? Okay, and then the market continued going all the way down. Oh, no, the buy order was here. Oh my goodness, we bought it at the very top. Okay, so then now, what do we do? Well, let's actually take a look. Should we cut all the losses? Okay, we exit immediately. Okay, and then we restart again with our strategy. Is this what we should do? All right, let's quickly take a look. Remember, number one, should we do that? Yeah, we could, right? We could just can it out and then restart the strategy, take a look at the pivot points, and let's take a look. You see prices are now above the PP, so potential for the price to go up to R1 and R2 is likely, okay? Now, I do want to look at a bigger direction to see if I want to hold the orders, right? Remember, second option, right? Hold the order, add an order. Okay, should we do it? Let's look at the bigger direction. So based on the bigger direction, there's a few things you can do. Either draw trend lines or utilize our stochastics and RSI. Remember? Okay, so for example, right now, if we're going to be one, let's draw a trend line. Great. So as you see, the lows are becoming higher. Okay, so lows are becoming higher, and then the tops are what? You see, the tops are, well, the tops are not becoming taller. Let me change the color to blue. So we're in line with each other. Great. You see, the tops are becoming not higher, not lower. No, it is the same. So what happens is basically this is called an ascending triangle. Okay, ascending triangle. There's two takes. Some people preach that ascending triangles will push the prices higher, and then there's another group of people that preach ascending triangles. It means that the price is consolidating at the top, and then there's a chance that it will actually bounce down. Okay, potential reversal. Okay, right. Tell you something, guys. Triangles always give you a 50-50 percentage. Okay, there's no such thing as, oh yeah, there's a 80% chance that an ascending triangle is going to go up. There's a 99% chance that a descending triangle, the prices are going to go down. No, there's no such thing. Okay. All right. So let's take a look. Obviously, prices are consolidating. Okay. Do we see that there is a potential that the prices may reach higher? Yeah, for sure. But then is the prices capped? Especially capped at where we entered on a buy? Yeah, of course. So then what should we do? Well, obviously with this trend that we're looking at, okay, is that the trends are weakening. Okay, if these triangles are happening, there's a potential weakening of the trend. Okay, so we now have to decide, should we cut the loss? Okay, now we could use another confirmation. Let's take a look at D1. Do we have any overboughts or oversold zones? No, we don't. Then what about H4? H4, let's quickly take a look. All right, there is a overbought zone. Sorry, oversold zone, right? One, oversold, oversold. Okay, so basically we should have do a buy here. Okay, then we would have been in a safe place, okay? But obviously we entered before the first, right? And then this is where we did our buy, right? Obviously, which is right here, and therefore we are profiting. That's great, okay? So you see we are on our oversold, so we did our buy. And then remember how we have to exit the trade is when the H1 reaches the 70 line. So let's quickly take a look. Did the RSI reach the 70 line? Well, it never touched the 70, right? But then the chances of it reaching there, yeah, of course, there was right over here, right? And then obviously if we did respect and exit at this type of time, then we would have been perfectly fine. Oh, sorry, no, this is the 5th. So we've been around here. Oh, it hasn't touched the 70, but it has reached close to it. We could have exited with a profit. All right, so now tell you what, if we're stuck in like this, okay, to respect the RSI, okay, to respect the RSI exit, I would make an adjustment to the trade, okay, tell you what is my plan. Okay, one more time before we jump in, I do want to tell you one more thing. All the things we're doing here is purely for educational purpose and entertainment purposes. In no way or form we're providing you signals, okay? So do really do your trials on demos accounts first. Okay, if you have questions, reach out to us. We're more than happy to talk Forex with you. Okay, so what I will do, okay, obviously we have not reached the 70 point on the RSI yet. Okay, so technically my buy orders for this doesn't have to be exited yet, okay? But I want to limit my exposure in the market. So what I will do is very simple, okay? I will take the profit, take it, I'll close that profitable order, okay? But I also want to limit my loss, okay? So then what I will end up doing is basically I will can out the highest, which is this one, okay, AUDJPY. Why? Because we already see via our D1 that there's a consolidation. Possibly the prices will try to reach to my resistance point, okay? It will try to reach there, but there's always a 50-50 chance that it will not, and it's just going to bounce back down. So let me cut the loss, okay, and then take the hit. So what has happened now? Let's quickly take a look. We took a profit of $8.39, or consider the swap as well. So this order ended up being roughly what, like $10, okay? It's roughly $10 profit, while we actually had a hit of $52 loss. Okay, so 52 minus 10, what happens is then we technically took a loss of $42-ish. Okay, so I limit my exposure. My margin now increases, which is great for us. Okay, and then we can enter with our set of strategies again. Okay, whether be it I want to use my pivot point or I want to use my RSI stochastics, we could do that. Great, but then RSI stochastics, technically speaking, um, there's no entry signal because we already exited our entry signal per se. Okay, all right, so I'm going to add on to one more thing here. Okay, you see, we still have an AUDJPY, but why are we holding on to it? Well, very simple. Because in reality, the reason why we're holding on is due to two reasons. My assumption. Okay, trading is always very subjective. Okay, and the assumption is very simple. What's the assumption? The assumption is the fact that my RSI must touch the 70 line on my H1. It must. Okay, that is the only time that we will exit any buy orders. Okay, so then based on that assumption, okay, I will maintain my buy order. But because I actually wanted to limit my loss, okay, so I want to take the profits first, okay, that means I actually exited this trade with the profits. then what I should do is then we should actually enter, okay, into a trade right over here by chasing, should we say chasing the trade. Great. This is gonna be very uh, brain demanding, okay? If you guys don't get it, that's okay. Just come back to it, and we could always talk. Okay. I hope the microphone now is much better. Okay, hold on. Before we start, let me reset the microphone. Okay, one moment. Hello, hello. Is this better? No, it's not. Okay. Let me increase my volume. One moment. And then we're going to get into the exciting stuff. Okay. Okay, the volume is still low. Okay. Testing, testing. Is this volume okay? Hello, hello. Is this much better? Okay, great. This is probably much louder. I hope I'm not screaming in your ears. All right, so now let's get on. Okay, after our short little break, fixing up this microphone thing. All right, so moving on. Let's go. So what we're going to do is we're going to chase the trades, right? So what happens is then by chasing the trades, we're going to be entering into the trade. Why? And we're going to exit basically when the RSI reaches the 70 level. Okay, this is the sole reason for placing this additional trade. Now there is a way to restrict or limit, okay, the loss on this buy order, okay, and potentially turn it into profits. We don't just place the same volume of trade, okay, but rather we can increase the lot size. Remember, right now our trade is at 0.06 lots, okay? Our margin available is there, right? We can actually increase it. The martingale idea is actually quite interesting. What happens is 0.06, we're in a loss. So then what we do is we double it, 0.12, okay, 0.12. If we can actually go to 0.12 lots, then all it has to do is to reach midpoint and we will actually be making a profit. You understand? Okay. So anyways, what we're going to do here, we're not going to do a pure martingale. It's super risky. We don't recommend it because the market continues going down and you have to keep on doubling. It's crazy. So anyways, we're not going to double it. Okay. What I usually intend to recommend people to do is always add on about, let's say basically roughly what 25%, okay, of your order size. So example is 0.6, okay, a quarter of a percent, you're talking about like 1.5 to 2, 0.01 or 0.02 roughly, okay? So basically 30% you're looking at 0.018, so that's roughly like 0.02 lots, okay? So by sticking to that idea, we drop it down to 0.08, and we place a buy. Okay. Now, if it actually reaches midpoint, we don't break even. We actually still make profits. Okay, but don't aim for midpoint. Okay, what we can actually do as an exit plan, okay, for AUDJPY is the fact that if the average of these two laws are profits, then we can exit. Or if we want to really stick to the stochastics and RSI rule, which is literally wait for our RSI to reach the 70 level and exit. By that time, potentially both orders are in profits, potentially. Okay. All right. Great. So let me just organize that one more time. All right, let's take a look. Euro CHF. Euro CHF. Euro CHF. Let's take a look. Sell, sell. All right, on our H1, it's already more than below the 30. So no questions asked, guys. Let's just exit it. All right, there's no need of even explaining how this whole thing works. It's no need. We basically just take the loss. Take the profits. Okay, because it already reached the exit strategy point. Okay, it respected it, right? RSI is below the 30, then we exit. Overall, the good thing is once that strategy hits, basically we exit with a profit. That's the best outcome, right? That's the best outcome. Okay, great. So then now what? Now we are stuck with a bunch of gold trades. Great. Let's take a look at it together. Okay, gold. What to do with gold? Let's quickly take a look. D1. Okay, D1 is super important. We already explained that when we did H4, our stochastics and RSI strategy basically fooled us, right? We entered right over here, had some loss, so we had to cut it, add some trades, cut the loss, add some more trades, and then we continue adding trades because of the H4, okay? Because of the H4, because it constantly was above the overbought zones, right? Great. So let's go from the highest time frame and decrease it. So, oh, look, the losses are becoming smaller, so that's a good sign. All right, great. D1, what to look for? Basically, is the RSI and the stochastics on overbought? Yes, so therefore this signals that we should enter into a sell. Now, should we add another sell? No, okay, because we should not overexpose ourselves in the market. Okay, it's already in a sell right now, which is perfect. We already have an order in sells that is profiting, so keep it the way it is. Okay. All right. Now, one of the key things is this. Gold may spike up a little bit. Okay, may. Okay, why? Because a lot of people are expecting one thing. They're expecting the fact that potential cut in rates. Okay, so then cuts in rates are gonna make the gold much more favorable. Okay, basically people want to be investing on gold because potentially the dollar will weaken a little bit. Okay, that's their mindset, right? But then after all, no matter what type of news, it's always temporary. Okay, so let's quickly dive in and take a look at gold. Right now, as we already said, shall we place a sell? No. Okay, but then when can we be much more certain that the sell is on the right direction? Is when the stochastics over here, okay, the stochastics lines, okay, they actually cross. If the green goes below the red dotted line, that's perfect. Okay, it will be beautiful. Then a strong sell signal will actually be very prominent. More people are going to be more confident in the sell. Okay. All right. I think I should explain a little bit about stochastics. Stochastics is not talking about the direction of the price. Okay. Stochastics is actually a measuring tool of the volatility. Okay, amount of people or the strength of the direction. So if the RSI is on the top, okay, that basically means that the trend right now is quite strong. But if it's too strong, a lot of people are going to start shying away. So that's the idea, you see. So right now, if this is like at 80, that basically means that this trend is very strong. So for example, what this means is that, yeah, the trend of the bullish trend is strong. But you see, if the cross starts happening, that means that the trend will start weakening, okay? So it doesn't mean that the market is going to jump all the way down. No, it's basically the strength of pushing the price higher is weakening, meaning it will start decreasing in its growth. That's exactly what it means, okay? So you see the cross is happening. Now let's drop it to H4. The cross has happened, right? So you see the cross has happened. A lot of people are starting to sell or exit their buy orders. Okay, you see the cross happened over here, right? And then the market fell a little bit, okay? But then it spiked back up. All right, so what do we do with gold orders? Well, in reality, if we want to actually limit our exposure, okay, we can actually choose option number 2, okay? Hold the order, add an order, okay? But adding an order will actually increase our margin used, right? So in the case that I do want to actually follow through with the stochastics and RSI strategy, what I can consider doing is this. For example, right now in my gold orders, right, I have a 0.5 right over here, this one, right? Imagine if I actually cut this loss of 0.5 and I drop it on the top, okay, of a 0.5 lots, okay, what happens is then if this market comes back down, my 0.05 lots is going to be profiting. Although I will lose out immediately this how much is this? $278, okay? But if the market does come back down all this way, then we'll make back that $278. Okay, that's the idea. Now that is for people who want to actually limit the risk exposure. Okay, I'm not going to do that. Okay, for one simple reason, because we're going to stick with the RSI stochastics strategy. That's it. Okay. All right. So that's pretty much it for today. Last little bit of new strategy to share. Do you guys want to actually hear a new strategy? Or is it just too much information today? Maybe it's too much information. So I guess that is it for today. Okay. So I guess the new strategy will wait until next week to share with you. All right. Well, that's it, guys. Thank you very much for your time. See you next week. OK，好，谢谢。因为我的电脑超 lag 的，我不知道有没有在按钮。